Can upcoming winter solstice become a good day for bad people to become imploding markets, or maybe finally stopping doing this? Today we will get through major red alerts on the market. As always, we'll get talking about possible black swans circling around the market, and also about everything from investing to trading, and about the sentiment, the positioning, and economic outlook indeed. So thank you very much for tuning in. Let's at first get let me check whether we are live. All right, so stream is recording, and I'm very happy to welcome you here today at the new episode of Blockrevision. Let's get into next next element of our Blockrevisions puzzle in order to get to know more. All right, and we are over an intro. So at first we are getting over to economy view, and inside of it we have the question whether we are prone to get to 6 or even 7% in interest rates. So from Fed members that are playing up the forecast of some Fed watchers, the rates may need to go to 6 or even 7%. One of them recently, Mr. Williams, that is rather neutrally positioned on a hawk-dove rate, said that is not his baseline. So I literally buy in this, that 6 or 7% is too high, but for this projection we would need a much bigger and much more favorable developments underway. Right now, many elements along the economy is cracking. That's why I wouldn't expect this one to got that brave. So what we got of next? So if you don't watch it live on your computer screens or smartphones, just letting you know that every extension of the topic that I'm talking about is right at the screen, and I'm attaching the most important bullet points you would better to get familiar with in order to comprehend the whole context. So right now it's looking as though the timing of when interest rate will go down, or when it will be appropriate to move it down, really is not tied to a calendar. We don't have the luxury of pricing for perfection in inflationary strife because we have a price stability mandate. That's what also been said along Fed's members. Fed's also aware of its very often missing projections. That is why they need to be elastic. Just remind 70s when things had been going better until it didn't. So we have to imagine what the risks to inflation are, and to me, they are still on the upside. That's why you need to have your seatbelts fastened. All right. Does something smell underneath? That's what the chart has Bloomberg attached recently in its press. So usage of the Fed's discount window has risen in recent months. You right now have a explanation if you haven't recently studied that case. So This is the one of the explanation. Think Federal Reserve lending to depository institutions plays a role in supporting the liquidity and stability of the banking system. So looks like someone's been tapping the Fed's discount window by providing ready access to funding. The discount window helps the depository institutions manage their liquidity risks efficiently and avoid actions that have negative consequences for the customers. Among them, there are such elements as withdrawing credit during times of market stress. For instance, sorry for switching this over. So the discount window supports the smooth flow of credit to households and businesses. Look at this. Use of the discount window tends to coincide with the darkest days of market turmoil, right? As back in 2008 and 2020 as well, with what the time, the present time been. So providing liquidity in this way is one of the original purposes of the Federal Reserve System and other central banks around the world. So, by raising this curve, do you think something smelling like a potential crisis in the air? You may write down your opinion in the comment section below, or even on chat as it's live right now. Let me find out whether you have written down something on your chat. All right, so I can't find anything of yet. All right, so we are jumping back. Let me find out the windows. All right, we are get back with our transmission. Okie dokie. Once again, as I had probably switched too many windows at once, that's why it got a bit messy. All right. US-China war is for real. For now, still just economically. Dear God. Otherwise, there will be a third world war and no one will literally withstand. So anyone seeking to supply them with US technology will require a license from Washington from now on. So when I meant anyone seeking to supply the industry with this technology out of the one of those out of the China would need Washington agreement from now on. So they claim that this work will continue, as will our efforts to detect and disrupt Russia's efforts to obtain necessary items and technologies for its brutal war against Ukraine, including from Iran. But underneath, it's all going on about United States withstanding domination, in my view. The full list of companies added to the entity list includes 36 of them right now. You may find out even more, and that means that these things, unfortunately, is going much faster and much worse than it previously supposed. All right, ECB plans. So policymakers have signaled a preference for gradually rolling off maturing debt by halting reinvestments. A strategy also been used by the Bank of England. So ECB has by Fed, but ECB has similar path to Bank of England pathway. they do not consider to sell the bonds outright, even if bond markets struggle. The ECB, however, will probably press ahead with QT as it has backstops in place to deal with any fallout, they claim. These are diverting reinvestments from a separate pandemic portfolio to trouble spots, and that's on par with a newly created bond buying tool if gyrations are deemed to be unwarranted. It's hard to say how far things may get pushed regarding that euro area has more severe problems than the US and stay out right now with a wait and see approach game when taking any decisions in such rough water is head scratcher for many economies right now. So for me, euro have much more bumpy road ahead than US dollar. That's why I would bet it, or even when valuation on the USD is high right now, I would bet it that USD to euro may strengthen along the next year. Twitter users vote against Elon Musk. So Twitter users voted for Elon Musk to step down from his role as head of the social platform in a poll that billionaire entrepreneur said he would respect. He indicated after taking the CEO's seat that he'd only be in charge of Twitter for some time to complete the organizational overhaul he thought it needed to prosper. Therefore, overloaded with work, deprived of sleep, finding more and more difficult enforcing his radical changes. Tesla staff wasn't enthusiastic since the beginning of Elon's Twitter's overtaking, afraid that it will reverberate on how that electric vehicles company will perform. Recently, the billionaire has been looking for new investors at $54.2 per share, the same price he paid when he took the company private for 44 billion in October. So it looks like Saudis are already committing, and I will just Saudis already committing. Prince of Saudi Arabia became the second biggest shareholder after Elon Musk. So what we already have seen that were Saudis changing this view how the trajectory of sport in Europe works, especially football. Paris Saint-Germain club been governed by Qatari sheikhs, bought all best players from around the globe, and right now there are no, I would say, powerful team. It's all about the money. Right now, Arabians, this one is Qataris, trying to change the way how the free speech is expressed in the West. Arabian royalty bought Twitter to govern West's way of thinking. So that's why much more people are turning away from Twitter. That's what's sparking much bigger problems in my view. All right, so that was Twitter. And right now, the Putin that is crashing his own economy. So Putin's war makes Russian stocks world's worst, down 44%. The MOEX index heads for worst year since 2008. So the prospect of global downturn over the next few quarters doesn't bode well for Russian oil, especially all the time when the European Union is fully committed to reducing its reliance on Russian commodities. country starting a long war is never the beneficiary of self-inflicted actions. We do know that that used to be a smooth sailing for Putin to conquer Kiev. They gave themselves, however, 11 days to accomplish it, but to no avail. The level of corruption and misinformation among Russian military structures was atrocious, and that feedback looped on them with a vengeance. So, without fresh capital inflows and much more trust, I find that the days of Russians and Russian economy is eventually over, and everything may fall apart one day. So that was about market outlook. Right now we are jumping to what is going on. So witches triple witching event. So for those that do not know, triple witching is the expiration on the same day of stock options, stock index futures, stock index options contracts, and that happens right as here depicted. That happens every quarter on the third Friday of every single month of March, June, September, and December. So this time, nominal open interest crossed 8 trillion bucks this week for put. Previous week for put and call options on the S&P 500. That's, however, just shy of a record set in December 2021 ahead of the quarterly triple witching. So last year, the December event saw stocks 600 volume jump to levels reminiscent of the pandemic shock on significant intraday volatility. On the day of the event, the polarization on the market very often shifts as new group of investors turn up and others just breaking loose. This is all so indifferent for stock market dominant side, and the question is, may it happen this time as well? You may bet it in the comment section below. All right, so remember about the chat, this ongoing live. You may post your thoughts. Crypto Outlook. We are jumping for Crypto Outlook to web, and for this one, I need you to to switch to Bloomberg. So right now, you can find that Binance faithfully fighting bear market blues. Binance US explores buying other distressed assets after Voyager. So there is no earmarked by Binance amount for acquisitions, and the exchange still has hundreds of millions of dollars in current assets from its growth round. So Binance US is exploring more acquisitions opportunities after agreeing Voyager Digital, agreeing to buy the Voyager Digital. So also Brian Schroeder admits that they always maintain one-to-one reserves, and there are subject of regular audits and regulatory reporting by government entities. So I've given more trust to Binance than to FTX was, especially that they are much more compliant with some regulatory entities, and the things are getting more clear and transparent than it was with FTX. So structure of Binance is much more distributed among the globe, And I would say that much more elements would point to the fact that Binance should withstand this bear market, as they already gone this through um, the last bear cycle. So FTX hasn't made this. They've been set off 2020 or even 2019, that was where things were starting to thrive just after this bear market occurred. That's why if the company just go through the full cycle, that means that they are much more trustworthy in my view. So that's the element, and right now we are jumping to another section that is a market movers, and for this one let's talk over the market calendar. So I will go through market calendar with trading economics, and this week before Christmas is not much of being packed with many important events, but quickly just look through together. So we had a Bank of Japan interest rate decision, and we've seen that Bank of Japan recently decided to tweak its guidance a bit, and causing this USD JPY pair to sell off. So a central bank caught markets off guard by tweaking its yield curve control policy to allow the yield on the 10-year Japanese government to move 50 basis points either side of its 0% target, up from 25 basis points um, previously considered. So it looks like Bank of Japan is afraid of upcoming possible inflation. We are hitting the 4% level. So the thing that may get even worse. That's why reacting in time is highly needed. Right now, let's jump to next. We have building permits in US that is lower than the forecasts, and right over we have inflation rate from Canada, consumer confidence from Germany, inflation rate from Japan on Thursday, and on Friday personal income, personal spending, and durable goods orders to watch. So these are the most important elements of market movers,